Hi everyone, welcome back to Accounting with Morgan. Today we're discussing debits and credits, and so by the end of this video you should have an understanding of how they work and how to use them. So first, what are debits and credits? They're the foundation of the double entry accounting system, which means every transaction is recorded in at least two accounts, one debit and one credit. This system keeps everything balanced like a financial seesaw. Now let's clear up a common myth. Debits and credits do not mean increase or decrease by themselves. They simply refer to the left and right side of an account. A debit means the left side and a credit means the right side. Whether a debit increases or decreases an account depends on the type of account. Here's how debit and credits work in different types of accounts. Assets. Debit increases, credit decreases. So for example, if you're getting cash, that's going to be a debit. But if you're giving someone cash, like cash is decreasing, that's going to be a credit. Liabilities, credit increases, debit decreases. Equity, credit increases, debit decreases. Revenue, credit increases, debit decreases, and expenses, debit increases, credit decreases. Once you memorize these patterns, journal entries become so much easier. One way to visualize debits and credits is through a T account. You literally draw a T and write the account name on top and use the left side for debits and the right side for credits. It's a simple but powerful tool, especially when you're first learning how to record transactions. And so I kind of tried to draw a little drawing for you guys, so hope you can take a look at that. Now let's try a quick example. Say a company pays $500 for rent. Rent is an expense, and expenses are increased with debit, and cash is an asset, and cash goes down, we credit it. So the journal entry for this would be debit, rent expense, $500, credit cash, $500, boom, one debit, one credit, and everything is balanced. Now here's another example. So you have a company gets $400 in cash from a sale. So because assets is going up, you're going to debit that. They're getting cash for $400, and then revenue is going up. So when revenue goes up, that's a credit. So $400. So again, we have a debit and a credit, and it's balanced. In conclusion, debits go on the left, credits on the right. Each transaction must have at least one of each. The effect depends on what type of account you're working with, so mastering this is key to understanding accounting as a whole. So that's the end of this video. I hope you guys learned a lot. For the next video, we will be discussing types of accounts. So we'll go more into assets, liabilities, equity, revenue, expenses. So yeah, thank you guys so much for watching, and continue to subscribe and like for more.